Time for another stock review, this time S&P Global, SPGI. This is one requested by one of my members, and if you are a member of my channel and you do a super chat from $1, it'll go on the list. Higher up, it'll get done higher up on the list. Makes sense? In this review, I'm going to give you a full review on S&P Global. Very interesting, this one. It looks very interesting. I'm very excited to do it. So you might make some money on this one, and I'm going to share with you lots of information. So is the money printer on? Well, we're going to peruse over the numbers. We're even going to scratch our chin just a little bit and see if we can make money on this stock. During this review, I'm not only going to share with you the chart, but you can get much more information on Sunday with Sensei. He will do the buy zones, sell zones. Join him if you are a member on Sunday. Join him and he will do a full technical analysis on this chart. He provides that service for free for our members. We're also going to do a back test, how it compares to the S&P, latest news, latest ratings, what's going on, what others are saying about the stock, what about the website itself, what's going on. We're going to look at that. We're also going to look at the latest earnings. We're also going to go over deep dive into all the numbers. We're going to show you the balance sheet, who's buying, who's selling on the inside, short position, margins, you name it. We're going to provide you all this information and then provide you with all the software that you can do your own analysis, even further deep dive. Does that sound good? Of course it does. Best channel in the world. We're live all the time, providing our members the best live service. And in fact, we have the highest engagement rate of any channel on earth. 98% of our live viewers are members. Go and check it. Don't take my word for it, even though it's true. Go and check it, and I'd love you to come back to me and go, oh yeah, you are. Even more than Mr. B, CNBC, Meet Kevin combined. Absolutely. So let's get straight into our review for this stock. Now remember, it's very, very important. I only own the S&P. I'm one, and I don't mean S&P Global. I mean S&P VU. I'm 100% invested. I don't own any other stocks. So I'm not pumping the stock. I'm not dumping the stock. I will rank number one for it though. I rank number one for nearly all the stocks that we cover on YouTube. But I'm not here to pump and dump the stock. I'm just here to tell you all about it so you can make an informed decision. However, my stocks do rank. My videos do rank, and a lot of people get to hear about it. And we just had one a few moments ago with Tilray, and everyone went, I'm buying. And I went, oh my God. Carry on, do what you want, make some money. I don't care. If the reviews do well and everyone buys the stock and it goes up, that's great. Doesn't benefit me. I only care that my members make money. I just like helping people because I'm like that. All right, let's get straight into it. Okay, so we'll start from the beginning. If you like this content, tap the like button. If you love it, subscribe to the channel. Why? I don't know why. It's more important you watch, actually. Subscribing doesn't do anything. Watching is great. If you watch, I earn 1 cent per person per ad. So 3 ads in this video. When it goes out, I'll make 3 cents. There you go. That's how it works. Right, what is this stock? You might notice a similar pattern to the S&P 500. We'll see how it compares in a minute. S&P Global, up 1,641% over time on this chart. This goes back to 2000. It may have been before then. We'll cover it in a moment. But look at that chart. Looks like the S&P, doesn't it? There's COVID. Look, March 2020. Was it? Hang on. No, it's not. No, it's not. There's COVID. And then we had this sell-off here. Let's go in deep dive. Have a look. S&P Global. What is this? Because straight away you're thinking it's the S&P 500, right? Engages in the provision of transparent and independent ratings, benchmarks, analytics, and data to the capital and commodity markets worldwide. It operates through the following segments: market intelligence, ratings, commodity, insights, mobility, indices, and engineering solutions. The market intelligence segment provides multi-asset class data and analytics integrated with purpose-built workflow solutions. The ratings segment is involved in credit ratings, research, and analytics, offering investors and other market participants information, ratings, and benchmarks. The Commodity Insights segment focuses on information and benchmark prices for the commodity and energy segments, energy markets. The Mobility segment offers solutions serving the full automotive value chain, including vehicle manufacturers, automotive suppliers, mobility service providers, retailers, and consumers. And finance and insurance companies. The Engineering Solutions segment engages in advanced knowledge discovery technologies, research tools, and software-based engineering decision engines to advance innovation, maximize production, and improve quality and reduce risk. The company was founded by James H. McGraw and John A. Hill in 1917. So it has a huge amount of history, headquartered in New York, New York. The listed name is SPGI, S&P Global. Interesting. I've never heard of it until now. Looks interesting so far. Founded in 1917, 40,000 employees. The CEO is Douglas L. Peterson. I would love Douglas L. Peterson on the phone, show. I have a Meet the CEO series. I never sell or go to anyone offering my services, ever. Don't believe in it. I'm always about underselling and overperforming. If you would like Douglas on the show, and don't leave it to somebody else, this is what you do. Go to Investor Relations of the website. Just search S&P Global. Go to Investor Relations, email them and say, Martyn Lucas does an investor Meet the CEO series. Put them in contact with me, but you build the relationship. Don't pass it on to me. You build a relationship with them. Say, I'm an investor. Would love to have you on the show. Learn about the company. Learn about what you do. And Martyn Lucas will interview you. And my CEOs that have been on love it because it's just open and easy and free. It's unscripted. It's not for scammers. Dave Mitchell would never want to come on my show. That would be a joke. That would be brilliant. Be a slaughter, that would. And Peter Rawlinson and anybody else who wants to line up, I'd quite enjoy it though. Right, but it's an unscripted event. Let them know and I'd love to have them on the show. Right, let's carry on. Looking at this stock. If you were buying it on margin, 25%, so it's regarded just like the S&P 500, as low as it gets. Now, this is very interesting. I've never seen this. Never, ever seen this. No volume at all. People just hold it. They don't sell it. No one trades it. Volume, 0 today. I've never seen anything like it. You buy it, and you leave it. I've never, ever seen that. No volume at all. What does that mean? I don't honestly know. I've never experienced this. Dividend yield, 0.72. We'll look at the dividend in a moment and see what that's all about. Price to earnings ratio, 47.58. So it's a lot more expensive than the S&P 500 by nearly double. 52-week high, 505. 52-week low, 340. No real volatility, just keeps trending upwards. 157 billion market cap. Interesting. Very, very interesting. Never seen a stock like it. Let's keep going. Let's look at, in fact, we'll do it another way. We'll look at the insiders another way. Morningstar, don't ever use any of these ratings. They're paid to say whatever. It's a buy rating, 88%. Hold lever, no one selling. The bulls say S&P has demonstrated strong margin expansion given the relatively fixed nature of the firm's cost structure. Incremental revenue often flows to the bottom line. The bears are saying S&P's index business has benefited greatly from the shift to passive investing, which could see limited growth going forward as index levels have reached elevated multiples. I can see where they're coming from, but I don't see any sign of that slowing down. What about their earnings? Beating earnings, beat, keep rising. Earnings looks pretty good. October the 31st. If anybody wants me to cover the earnings, $5 super chat, I will cover the earnings for you, as long as you are a member. Who's buying the stock? MasterCard, Visa, Costco, the S&P 500, VU, Microsoft. All solid. No Mullins, no scam stocks, no idiots. No, all real solid investors buying. These people never sell. Look at all these stocks. All up, all green. I am loving it. I am loving it. Has the S&P turned green? Yep. Didn't I say today that the market would turn green? Didn't I say that? Let's do that because everything is overreacting for NVIDIA earnings, and now we're going to rally back up and wait and see Tilray. You had an opportunity to buy Tilray this morning in my previous review, previous news. No surprise. We're coming into NVIDIA. The touch line is just round the corner. A very, very interesting day. Everything is up here. All right, very good. Now then, let's move on to those insiders for a moment. Scroll down here. Robinhood. Who's buying this on Robinhood? Over time, you can see I'm not really interested in what Robinhood investors are doing. They're buying, they're selling, they're buying, they're selling. Nothing really much there going on. We know the volume is insignificant, so we're not interested in that. I do want to know which hedge funds, however, own this. So I'm going to go on to hedge funds. And what I'm seeing there is it looks like uninformative selling. Can you see that? It's equal. That means they just keep trimming. They buy and they trim, they buy and they trim, they buy and they trim. That's what it looks like. Fund management, TCI fund management buy 1,367 shares. Total shares they've got now, that's 4,634,000. Oh, hang on, 4 billion, I think that is. 4,638,400,000. Yes. Okay. Hedge funds are buying this. Now, when we sell, what are we doing there? When we sell it, okay, our selling is much smaller. Okay. Long view. I'm just seeing who owns this stock to get an idea. Open a position. Okay. What about insiders? Insiders have just sold. Uninformative. Sorry, informative sell. Informative sell. Just trimmed off. How much this? Oh, 7,000 shares. Nothing. 3 million, that's nothing. Nothing to be concerned about there. So nothing there to worry me. I like the hedge funders. The selling is nothing. It's insignificant. Very, very small selling. Nothing at all to worry about there. Okay, we like all of that. Like it all so far. Let me go and look now at how it compares. If you like this so far, tap the like button and consider subscribing to the channel. I think you're going to like this one. This is interesting. Let me see. Right. Definitely the numbers are adding up. Let's go and look deeper at these numbers. All right, do you like that? A little bit of special effects. A little bit of special effects live in the show. I like to put it in. All right. I'm going to search for this. I didn't prepare this, but I'm going to add an extra element to this. So SPGI, let's look at if they qualify for a dividend king. Right, let's have a look here. I'm going to zoom this in. I'm going to go back to 2012. Right, let's have a look. This is their June, September. Okay, it's March, April. Yes, it's quarterly payout. Now, what we're looking for is payout every quarter, never miss, and increase. If we've got a dividend payout increasing and always paying out along with the growth, we've got something very, very exciting. 25 cents, 250. That looks like a one-off though. That's a one-off bonus payment. Look at that in December. 28, 30, 33, 33, 33, 36, 41, 50, 57, 67, 77, 85, 90, 91. Okay, so what we've got here is paying out every quarter, and we've got increasing dividends with an increasing price. This is good. growth and an increasing dividend. Very, 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 very good. Liking everything I'm seeing so far. What about backtest, the S&P? The S&P, if you put in 2015, so we've got a nice bit of time here, 9 years. If you put $10,000 in the S&P, you 3x'd 9 years. Remember, you double every 7. 9 years, you 3x. That's the average. 3x. That's good. Normally, that would be good. Look at this. S&P Global, 6x. 6 times your money. Wow. Very impressed. This is the blue line, S&P Global. This is the green line, S&P 500. Look at this. It basically exaggerates everything. If the market is going up, you can see it exaggerates the growth. If it goes down, there was COVID. There was COVID, look. It exaggerates it. So it does it basically. It does the growth on steroids, but it bounces back very quick. You can see here it came down, but there had been an opportunity here back in 22 to buy some more. Then it followed the S&P, and now it's accelerating again. This looks very nice. That's how it compares to the S&P. There's the chart. Now, if you want the buy zones, the sell zones, and all the levels, join Sensei on Sunday, and he will give you these. You really want to do that. If you add my review to the technical review with Sensei on Sunday, he will provide you with buy zones, sell zones, support levels, and he'll find all of those. And obviously, if you can trade this on the way up, you can just keep making money. This is very interesting. I like it. I'm glad whoever it was, I think it was Frederick who brought me this one. Thank you very much indeed. I like it. Let's move on. Now then, an analyst. Remember, I'm always going to throw the analyst under the bus because Seeking Alpha analyst can be anyone. I'm an analyst for Seeking Alpha. I'm not a financial advisor. Yet I am an analyst for Seeking Alpha. Right? No problem at all. They're saying buy. Take it with a grain of salt. Wall Street, buy. Quant, they're AI, hold. No one selling. We're all good here. Valuation F. It's expensive. It's twice the S&P. No one seems to care though. They keep buying it. So what you're looking for is a pullback on this one. Obviously it performs well. Obviously it's got a good dividend. Obviously it's well run. It's got history, got management, all good. Consistency. However, wait for a pullback. Just wait for a pullback because there always is, right? Valuation's expensive. Growth B-. Profitability A. Doesn't get better. Momentum B-. It's up from C. Revisions A+, up from B and D. Maybe there's not going to be a pullback right now. Okay, there's that. Now, if you like my Seeking Alpha presentation, links are below in the video and everything else when you watch it later on. But live, there it is in the chat. If you want the Seeking Alpha, $25 off and free trial, that's the software I'm using. I've got some more information here. CME and S&P Global mull sale of joint venture, Austria report. This is just out. This is 5 days ago, so it's very new. So CME Group and S&P Global were reportedly mulling a sale of their joint venture, Austria, which offers post-trade solutions in the foreign exchange and derivatives markets. The firms are working with advisors to search for buyers for the joint venture, Bloomberg reported, citing people familiar with the matter. The joint venture might be valued between $2 billion to $4 billion, including debt, the report added. Austria was launched by CME and IHS Markit in 2021. The joint venture at the time incorporated the former's optimization businesses, Trioptima and Reset, and the latter's market serve in 2022. SPGI had acquired IHS Markit. Some latest news. What about this? S&P Global sells FinCentric unit from IHS Markit deal to private equity firm, August 15th. I'm just going to read you the headlines for that because that was just like 12 days ago or so. Okay. Let me give you the website. This is their website, which is spglobal.com. just to show you how it all looks and how they put it all together. To navigate the challenges of today, decision makers need transparency and clarity to guide the right decisions. S&P Global is here to make this happen. We combine data, technology, and expertise to unlock the world's most expansive insights across markets and industries. This is essential intelligence. Very nice website, by the way. We accelerate progress from customers across the financial spectrum, from investors seeking growth and value to corporates building the future. Okay, that's enough of that, I think. Let's look at their latest earnings. Our quarterly revenue achieved a new record of $3.549 billion, increasing 14% year over year. GAAP operating margin increased over 1,100 basis points, and adjusted operating margin increased 450 basis points, driving 102% growth in GAAP EPS and 30% growth in adjusted EPS, respectively, year over year. The company expects to execute additional accelerated share repurchases, ASR, totaling $1.5 billion in the coming weeks. Okay, so we've now got repurchasing as well. The company is raising its full year 24 guidance, now calls for revenue growth of 8% to 10%, GAAP diluted EPS in the range of 11.15 to 11.40, and adjusted diluted EPS in the range of 14.35 and 14.60. Okay, it's just onwards and upwards. If we look at this, this looks very, very good indeed. Wow. Everything about this looks good. Let me now go over my numbers using my software. Let's do that right now. Okay, let's have a look at it. Now, I'm now going to provide you the link to this. This is very interesting. This is my alpha spread. My alpha spread, I'm friends with the CEO, and I brought you the best deal that is available anywhere. There you go, alpha spread. There's a link, and if you're watching this later, I'll put the link below. Let's first of all look at the valuation. Here we go. So, S&P Global, base case scenario, overvalued by 23%. Best case scenario, 1%. I can do that. For a growth stock, a growth company with everything ticking all the boxes, I can overpay by 25%. You're overpaying. It is expensive, but it will grow into the price. It seems to just keep catching up with itself. So 6 months from now, you'll be undervalued and you'll be glad you bought it. This is absolutely a buy from me. If you can get a pullback, then great, you buy some more. But I would get in and I'd buy a position in this if I was investing myself. I like everything I'm seeing here. I would buy a position and then I would buy more on a pullback. But 6 months from now, you're not going to care. 23% overvalued. I can live with that. No DCF warnings. It's reliable. It's reliable. We're good. We're golden. Look at this. Oh. This is like that other stock I discovered the other day. What was it? The land buying stock in Texas or America. Remember that one? I love when you discover great stocks like this. Revenue up 3%, and continuing steady growth, no dips. Operating income up 7%. Thank you, Leah. Can I give you this? You will be in the making of a video right now. There you go. You'll go down in history. There you go. Thank you very much. Thank you, Leah. There's my coffee. The only thing I ever sell are my mugs. Stacey Bailey can't make these. Do you like that, Stacey? Get yourself a mug. Go to my shop. Under the video. If you buy a mug, I guarantee you'll all make money. I guarantee I'll make money. I'll make about $3 on a mug. That's all I make. But I know they're expensive, but they're one-offs, right? So there you go. Quality counts, right? Anyway, get yourself a mug. Underneath the shop, you can see it. Buy it now. If you buy it now, Stacey says, hi, Leah. If you go, she loves your mug, by the way, loves it. If you go to the shop and buy a mug, it'll appear in minutes in Discord. And by the end of this video, I want to go to Discord and see who's bought something from the shop. All right, just click on any item right now under the video, and if you do it live right now and buy something, a t-shirt, a mug, a hat, it'll appear in Discord, and by the end of the video, I'll see who's bought something. Don't let me down. I don't want to get to the end of the video and I've sold nothing. It just makes me look bad, right? Now I've said it. It's going to make me look bad. People are going to go, not one person bought anything. Right, okay. Net income, 0.18% up. Financing cash flow up 16%. Investing cash flow. Operating cash flow up 19%. I don't know what to say about this. I'm trying to find something I don't like, and there really isn't anything. 61 in assets. Now we've got a proper company. Look, remember I always talk about, you don't want a company with buckets of cash. Otherwise, you just buy the money. You buy the money yourself. You know, you're not getting anything as a shareholder owning a company that holds cash. Just use your own cash and just earn 5% from it. It was easy, right? 61 billion in assets, 2 billion in cash. That's what we want. We want cash, but we don't want 80% cash. Otherwise, what are you? Just a pot of money. I can be a pot of money for myself. Perfect. Lovely. Got cash, 2 billion. 26 liability, 50% expenses. Okay. Let's see how much debt they got. Long-term debt, 11 billion. That is nearly half of their liabilities. Now I'm kind of seeing a little bit how they're growing like this. They are spending money. 11 billion in long-term debt. Look, 43% there is long-term debt. But with such a strong business, with rates coming down, that's going to be a huge catalyst for them. They're going to benefit from rates coming down. And normally I don't like to see 50% liabilities. I like to see 80% assets, 20% liabilities, low debt, enough money to pay off the debt. That's the perfect balance sheet. We don't have that, but the strength of this business, the strength of the assets, when rates come down, they're going to get a catalyst. This is going to be another draw for a draw up for the stock. Good. Operating margin, 68%. Brilliant. 40%. Net margin, 25%. FCF margin, 35%, increasing. ROCE is 10%. Now, if you want full definitions of all of these, if you use my software, and I've given you the link in the chat, go and use it, and you can get more information on all this. If you're watching the video later in the recording, I will give you all the links below. ROIC, 7%. Nothing negative. Everything's positive. ROE, 9%. Steady, like it. What about profitability score? 69%. Well, they're not a tech business, are they? It's not a software business. Very, very good. 69%. Not perfect, but very, very good. I suspect the balance sheet's going to be good too. 59. Not perfect. That amount of debt, not perfect. It's not an Apple. It's not an Amazon. Solvency score, 59. Okay? It's a good business. It's got a bit of debt. Solvency score isn't perfect, but it's not going anywhere. It's not going bust. It's been around forever. It's fine. Let's move on down. Here you go. Here's the downside. It's expensive right now. Worst case scenario, 20% downside. I can live with that because I would just say I had $1,000 and I put 80% in. I'd be all in on this because I think 6 months from now you're going to be up. So I'd go $800. I would keep $200 at 80%. I'd keep $200 to buy a dip. If it goes down 20%, I'd love it. I'd love it. I'd buy more. Then I'd be all in and I'd be fine. 10% average. So we're around about the S&P. Not surprising. We're around about the S&P. 10%. You've got a forecast, a highest forecast of 20%. So if you want the S&P 500, you might not get as much as that, but you won't get that. So the S&P 500 is going to give you more stability. It isn't going to drop 20%, right? But it's not going to give you that. I think the S&P is going to give you that. Okay? So it's more growth, slightly more risk. What do you want? Okay? What about short interest? Fantastic. No one shorting it. You're not going to get a short squeeze. Obviously, this sort of stuff doesn't short squeeze. No short squeeze, and you're not going to get no downward pressure either. No one shorting it. It's like Apple, hardly any short, like less than 1%. Very good. Okay. Competition, you can go and check the competition out. I'll give you access to my software. You can go and check the links. We talked about ownership 2 months ago. That's a little bit out of date. Should I cover it? No, there's no point me playing that back. Not for 2 months ago. Not much point. Not relevant, I don't think. So we'll leave that. The dividend we've talked about. Right, that's it. Let me give you a roundup of this stock. I like what I'm seeing. I like it. It's a buy from me. No question about it. No question about it. Dividends always paying out. Dividends always improving, advancing all the time. It's slightly expensive right now. Well, it is twice the price of the S&P. However, the S&P is actually good value right now. So it's not that expensive. It's not that expensive. It's just not as cheap as the S&P. But you've got the extra growth, but then you've got the extra potential for downturn. You've got exemplary management, been around forever, working well, good capital, balance sheet is great, not excellent. It's not going to go bust. I would buy 80. I'd put 80% of my money in that I'd allocated for this stock, not 80% all in. The 80% of the allocation for this stock. Leave 20% on the sidelines. If I get a 10%, 20% drop, that's potential, then that's fine. I don't mind. It's going to bounce back from there. I'm okay with it. We've got earnings increasing. We've got guidance increasing. Everything about this looks good. I have no issue with this. This is a good one for me. So there you go. It's a buy from me, and that's the way I'm playing it. All right, click above my head for all the links down below in the description. You'll find all the links as well for Alpha Spread, Seeking Alpha, Sensei on Sunday. You want to get the trading positions with this on Sensei. Every Sunday, 3 p.m. Central, he'll give you all information. I would strongly recommend you do that. And over here, I will put my Alpha Spread playlist. I've reviewed over 200 stocks now. I'll be soon saying 300 at this rate. 200, and down here, I'll create a playlist for SPGI. Thank you, Frederick, for asking me to do this all the way over there from Sweden. Thank you very much indeed. That's it. Until next time, as always, take care of yourselves and each other.